Welcome to Galaxy Brains, the weekly podcast from Galaxy Research. We're talking with Nic Carter about proof of reserves. We always think twice, we never need jerk. I'm done with FTX. Y'all, I'm sick of these jerks. Let's go. As always, I'm your host, Alex Thorne, head of firm-wide research at Galaxy Digital. We have an awesome show for you today. As I said, we're talking with Coinmetrics co-founder and co-founder of Castle Island Ventures, Nic Carter, about proof of reserves and how it could help the cryptocurrency industry in the wake of the collapse of FTX. We're going to check in with Christine Kim from Galaxy Research on updates and upgrades in the Ethereum ecosystem. And as always, we'll talk with our friend Beimnet Abebe from Galaxy Digital Trading about markets. But before we begin, please refer to the disclaimers in the link on the podcast notes and note that none of the information provided during this podcast constitutes investment advice or a recommendation, solicitation, or offer by Galaxy Digital or its affiliates to buy or sell any securities. We got that disclaimer out of the way, so let's get right into it. Let's go to our friend Beimnet Abebe from Galaxy Digital Trading. Bim, not a lot of macro news happening today in the markets or this week even. Obviously, the main story is FTX and the attendant fallout, both with affiliated contagion across lenders and funds, the buy side. Very affected by exchange withdrawal halts, but also in the markets themselves. What are you seeing?
We're seeing sort of a continued grind lower in spot prices. You've definitely bounced from like the panic low of the FTX day, but price action in general has not been constructive. Liquidity has been poor. Vols and sort of protection costs are still fairly elevated. So what that tells me is that this is a market that's fairly fragile. The other thing of note that's actually very important is that with all of the credit that has now left the system, like borrows are incredibly tough in crypto. And if you look at things like CME basis, it's implying like 40, 50, 60% below spot on an annualized basis, and that shows you that there isn't that much spot BTC collateral or ETH collateral that's available to folks. In addition, I think a lot of alt liquidity originated in FTX with their perp product. And so now the only other places you can really trade perps are Binance and DYDX and a little bit on OKX. But if you don't have access to those platforms, it's very hard to sell perps. And so there's a lot of liquidity and technical things in the market that highlight that it is a little bit broken. And so, my thought process is really around, and with any investment or with any sort of short-term tactical trade is who's the marginal buyer and who's the marginal seller. And right now, I think it's very tough to see who, the marginal buyer is and a lot of alt tokens. I kind of see, some long-term hodler types, buying Bitcoin because, it's moved down a lot. And, in relation to other sort of, assets around the world, the macro stuff, stocks are, close to the local highs, dollars sold off a lot, yields have moved a lot lower. So in that context, Bitcoin seems like, one of the best risk assets to own and just in that context. So I can definitely see, people that are into holding Bitcoin in the long run being like, this is a great value opportunity. At the same time, I definitely think that a lot of forced selling has gone through in the market in terms of, loans that didn't get topped up, folks liquidating collateral, folks getting to levels of spot or spot holdings that they're comfortable with given the higher vol profile and the increased downside risks. So there's a lot. I do believe a lot of the forced selling has gone through. And that leaves you with, in Bitcoin at least, it's just, minor flows. I'm sure later on in this episode, you guys will dive deeper, but miners have it incredibly rough right now from a hash rate, spot price, and energy cost perspective. And so, there's definitely marginal sell pressure from Bitcoin miners.
And that pressure, like it's call it $20 million a day of, new Bitcoin issuance that miners are receiving. That's enough to move price here. I mean, is it that illiquid? Are the markets that thin these days?
What we observe, in terms of liquidity at any given point in time is definitely worse than what we were 2 weeks ago. $20 million a day is normally not enough to move the market, but it's just the compounded effects over time, right? 20 million a day after 5 days, it's $100 million. 10 days, you're talking about 200. And I don't know about you, but I've been speaking to a lot of folks in crypto this week, and there are very few buyers and very few people
of that size.
That of institutional length that are trying to get aggressive here. At the same time, right? Like there are sort of base effects at play here, right? Like it's an asset that's moved down 55% on the year or something like that, 60% depending on what you're looking at. And so, a 1,000-point move higher here is pretty chunky from a percentage standpoint.
Right.
And also, you have, there is a short base in this stuff. So, you are prone to squeezes. And so, tactically, I could definitely see a lot of short covering rallies, whatever it may be. But at the end of the day, I think there's probably still more fallout from FTX and Genesis and Gemini Earn that's going to lead to some marginal selling, and then on top of that you have the marginal selling from the miners, and so I think my path of least resistance is likely lower. I also just don't see too many upside catalysts outside of. I mean, it's really tough for me to.
You're at a loss for words.
I've been at a loss for words before.
Yeah, you have. I remember earlier this summer. Yeah.
So it's a really challenging environment to sort of figure out what the path forward here is. I think right now my favorite position is not having a position, waiting for what the fallout looks like. I don't think prices are likely to explode higher anytime soon. So, while I am constructive on the space and Bitcoin as an asset, and generally speaking, like when collapses like this happen, they're normally like buy and forget about it for a little bit. And, 9 times out of 10, it's generally a good trade. So I'm inclined to think that way. However, the magnitude of FTX and the contagion is still unknown. So, until you get more information, I think it's really tough to take a stand one direction or the other.
Totally get it. Yeah, we don't have that much information yet. I did see, I think the bankruptcy attorneys said they're hoping to publish a list on Friday, the day this podcast airs, November 18th, that will apparently detail the top 50 unsecured creditors. So hopefully that type of information will be very, the market will be very happy to have that.
Yeah.
I guess lastly, when you look at the sort of alt space, particularly that was connected to FTX, the Solanas, all the tokens that are
Maps.
on
I still don't know what the thing does.
Oxy and Maps, FIDA.
Yeah.
But also just the Solana ecosystem.
Yes.
I mean, Solana's traded down pretty significantly over this. I saw DeFi, TVL, and Solana's down by like half.
I mean, well,
what do you think?
The thing is, think about the TVL numbers. They were wrong to begin with. I mean, it was 2 guys accounting for over half of Sol TVL back in the day, and I just think it goes to I'm sorry to get philosophical, but the culture of these VCs that wanted to get as much value into the the Solana ecosystem as possible. I mean, like if you take a thing like Cosmos, that's genuine. Like they didn't do the ICOs. They aren't like huge venture bags.
Right.
Like the growth and the hype was organic. And this stuff is just like, hey, we're going to buy this. You market here. I market here. It has value because we both think it has value. And we found some lender that will lend to us dollar for dollar versus this stuff, or even unsecured. And so, I think a lot of the Sol ecosystem was built on building blocks that aren't real building blocks. They're not, fundamentally like good, like, it's like you're building a house from straw instead of like bricks and like, solid material. You're not going to survive the winter with a straw right? You're not going to survive crypto winter with a straw
when
house.
someone comes to huff and puff,
Exactly.
they're going to blow that house down. I do think Solana, though, we're going to have Saul Kadir from our team speak next week about Solana. He's very bullish on Solana still, and he'll give us his reasons why. I do think that it's not. I'd
love to be there for that. I honestly would love a debate. I
think there's. We'll wait and see. We'll table that discussion for now.
It might get heated. Just saying.
The markets have really taken a hit. The sort of Sam Bankman-Fried linked assets, including Solana and many in its ecosystem, over the last week or two. It's crazy times, man. Beimnet's wearing this hat says "Let's get that bread." It's my hat, and my friend Ria Butoria at Castle Island Ventures gave me that hat. Thank you, Ria.
Shout out, Ria.
Hope you're doing well. All right, Beimnet Abebe, Galaxy Digital Trading, as always, my friend. Thank you.
Thank you for the hat that I'm keeping.
Let's go now to our friend Nic Carter, co-founder of Coinmetrics, co-founder and GP at Castle Island Ventures. The Prince of Proof of Reserves, my friend. Welcome. Good to have you here.
I am thrilled to be here with you again, Alex. Beautiful studio you have. Love it.
Yes.
You guys have upgraded.
We have, and really appreciate that. Obviously, Nick, the FTX situation has been incredibly dramatic in the market and is having wide-ranging effects, right? Even just this morning, this is Wednesday that we're recording this, Genesis, their lending business, has essentially closed its doors. Let alone the myriad buy-side funds that have assets stuck on FTX. As we said last week, we have assets stuck on the exchange as well. What's your just overall take on the current situation as it relates to, and also just the near, medium, long-term impact on the cryptocurrency industry?
It's devastating. I mean, I said this last week. I think it's the worst single event to hit us in crypto. I mean, in the modern era of crypto. Just like the level of trust that had been accumulated, their stature, the fact that they were an institutional exchange, they were a custodian, the fallout is just enormous. And the regulatory machinations, the wheels are turning now. I mean, there's reprisals coming in Washington if these headlines are to be believed. So I'm pretty scared about the continued fallout among the lenders. Certainly, there's others, other exchanges. No one trust has been eviscerated. No one's going to trust. I mean, for better or for worse. But I expect even Sam said it. There's secret insolvencies out there. So I think other exchanges liquidity will be tested. We'll see if they're all fully reserved. Devastating for the crypto fund landscape, for crypto VCs. I mean, a huge shattering of confidence, and it'll continue this little contagion. It's a continuation of the credit crisis we saw in the summer that was just put on pause, and now this is the last shoe to drop. Yeah,
it looks like they had big losses, Alameda, most likely, along with others that we have learned about last spring, and I guess plugged the hole with a hidden, internally labeled, mislabeled fiat account. Is what he said. And what I'm referencing for the audience is that the Financial Times published a balance sheet that FTX had apparently gone out to potential investors with late last week, which seemed to add up over on one side of the balance sheet. But then there was a line that said -8 billion, hidden, internally mislabeled, poorly labeled fiat account.
Fiat. -8 billion. Just a small oversight.
Yeah, just casually, this balance sheet, but, over here there's -8 billion. I don't know. But apparently it looks like they were plugging whatever hole Alameda had with these FTX funds. That's the prevailing wisdom at this point, although I'll caveat that we're not exactly certain what happened.
And it's reminiscent of the Tether Bitfinex situation, don't you think?
Yeah, I mean, when they had to dip into the exchange.
They took their loss from, I think, this Crypto Capital or something.
Crypto Capital,
150 million.
Latin American company they used to store some of the Tethers.
God only knows
this was years
what
ago.
they were doing. And then they just dipped into the cookie jar in the Tether reserves.
They socialized the losses among the Bitfinex account holders and issued them, what are they called, RHRs, I think, at the time? There's some...
well, I guess that was the hack, right?
Oh, so that was from the hack. So then this was the second time they had to socialize losses, and they issued like a credit token for the difference, and they eventually paid it back.
Yeah,
Bitfinex
it is actually remarkable. Bitfinex is the case study in how to recover from a loss like this. In FTX's case, I think it's unrecoverable.
Right.
The hole is too big, and the trust is completely lost. I think they did have an opportunity. If Sam had come clean right off the bat and he was like, we're going to do the Bitfinex thing. We're going to give you your recovery right token or whatever. The next time Bitfinex had their issue, they created the Leo token.
Right. Right.
So like there is precedent for ways out of these kinds of crises. This case, not possible, I think.
And or fold Alameda, and keep FTX.
They could have sacrificed Alameda. I mean, I guess that was a big part of the FTX value prop. If you look at the early decks, I was looking at early FTX pitch decks that I had from back in the day. Alameda was front and center in the FTX pitch deck. So obviously a sign that something was amiss, but that was the value prop was we will seed it with liquidity. It'll be liquid from day one.
Because we have all this money we're going to put there. We're going to make markets there. We're going to...
I think it was true. Like it was very liquid.
Right.
But of course, having a proprietary affiliated prop firm trading on your own exchange is the least kosher thing. And
it's essentially, totally not allowed in traditional markets.
Yeah, and so that was kind of always our issue with FTX was just the closeness of the Alameda relationship. Of course, they tried to sort of disguise that or imply that there was a Chinese wall, which there wasn't at all. So I know a lot of people think it was kind of unforeseeable. I'm not saying we foresaw it, but we certainly always thought there was something iffy there with that relationship.
As a venture investor, which you are, I mean, I have to ask too, one of the most incredible things, meaning like shocking, to have seen $32 billion last valuation publicly known, no board.
Yeah.
No board. I did venture, we demand a board seat on a seed stage deal.
Sure. If we lead a series
That's what I mean, if we lead it, yeah. And we'd like there to be a board. I mean, we'll start asking at that early of a stage.
Corporate governance in startups has been so amiss for the last 10 years. I mean, Zuckerberg and Facebook, like there's all these structures now where there's a single founder who is this sort of icon and is able to command total authority. And this is the worst of it. And I think now the pendulum's going to swing back towards real oversight, real corporate governance.
Yeah.
But remember, in crypto, there's a real hesitancy to take board seats. Andreessen often doesn't do it for a lot of token-related deals. Crypto funds often refuse to take board seats for liability reasons, right? Because you're on the hook as a board director.
I hear you.
You are liable.
Let's talk about the pendulum swinging back. Let's talk about proof of reserves, which has been in the conversation a lot the last couple of weeks. This is not a new concept. And Nick, you tell us, you've been following this for a long time. You've got the proof of reserves leaderboard, niccarter.info.
Yeah.
Check that out.
My website traffic has exploded.
Has it really? I mean, I've said it to everyone.
That, yeah.
Everyone's wondering, and Nick's been one of the only voices, but certainly probably the loudest in calling for and documenting the implementation of this transparency measure for exchanges. Also can be done by custodians, really anyone that possesses digital assets on behalf of third parties or other people. So first of all, what is the concept of proof of reserves? Tell us.
Yeah, we have a nomenclature issue, to be honest with you. And we've actually been sweating over the nomenclature for years. There were advocates of calling it proof of solvency, which is maybe a more accurate term because it does imply that you are balancing both sides of the balance sheet.
Right.
I actually preferred proof of reserves as a term because you can't ever really prove solvency with a cryptographic procedure.
Right.
Because you need a full accounting of liabilities, like all sorts of exogenous liabilities, right?
Corporate debt, who knows what.
Exactly. So that can't be cryptographically demonstrated. So I know a lot of people say, oh, proof of reserves, that's just a proof of asset. That doesn't include the liability side. Typically, proof of reserve, as discussed, and it's a term of art. It's existed for a long time, as you say. The first proof of reserves were being done in like 2014.
Wow.
After Gox. It does refer to proving your ownership of some crypto assets. That part is typically quite trivial.
Right.
And then B, adding up all the depositor liabilities on your exchange or custody.
So essentially, all the balances that you claim you're showing to your clients, theoretically, all the deposits that haven't been withdrawn, but so looking at your internal account database and making sure that every balance that's currently being displayed to a customer, you have the cryptographic proof that the actual assets are also there.
Yeah, and the hard part of a proof of reserve is the liability side, of course. There's all these Merkle tree elements for privacy's sake. But yeah, basically it's relatively simple conceptually. You have the assets on the one side, that's easy, and then you just add up all of the outstanding liabilities, and crucially, you allow your users to verify that they're included in the liability side. If enough users do it, you don't even strictly need an audit firm. It helps, but if enough users do it, they're the auditors.
Right. They'll find that, wait a sec, like they'll be in some chat, or on a Reddit thread or on Twitter being like, wait a sec, I saw 1,000 other people on the exchange share a screenshot that they verified that their assets were inside the Merkle tree and provably there, but mine aren't.
So it's like herd
Alarm
immunity.
bell.
Yeah, it's like herd immunity. If you exclude liabilities, that's how you would cheat a proof of reserve, right? You would exclude some liabilities. And if enough users do it, they actually perform the verification, then you can have very good confidence that the liability set is complete, especially if you include an auditor in the procedure. The auditor looks at your internal database and they ensure that the liability attestation is complete. And so I would say it gives you pretty strong assurances.
Yeah.
Luckily, now, it's not the best circumstances, but it is the most traction I've ever seen for POR by far.
Yeah, and you have I like your point about the herd immunity on the users. What we're saying too is that you have the exchange constructs a giant proof, right? A Merkleized proof. And there's a button on your account balance that says, verify.
Yeah.
And you're actually cryptographically verifying that your assets are part of that. They're in a branch somewhere of the Merkle tree.
Correct.
And so you could do it on demand, theoretically, the proof of assets part.
You could do it in real time.
Yeah.
Yeah. It's a little more cumbersome, of course.
Maybe they do it on a daily basis or something, but there's ways to do it.
Yeah, I could envision a world where we get to real time proof of reserves, which would be awesome.
And so would this have helped with FTX? If what we think happened, because these weren't, as far as we know, the assumption isn't these was a paper liability that FTX issued to Alameda. It was real assets sent out of the exchange, we think, to Alameda.
Even a proof of assets would have revealed that something was awry. In fact, the on-chain analysts of the world know this. FTX was always very difficult to triangulate their cold storage. Turns out they didn't have any, but most other exchanges, it's actually not that difficult to determine, well, here's Binance's cold storage.
Right, because you can see the hot wallet. You can see that they keep it around this balance, and periodically, if it gets high, you see where they sweep it to.
Yeah.
Or if it gets low, you see where they pull it out from.
Most exchanges have a standard conventional structure for that, and it's easy enough to forensically determine their cold storage. FTX, that was never doable. If they had done a proof of assets, or if it was normalized within the industry, then it would have been evident much earlier that something was amiss.
Right.
We would have seen the funds go to Alameda, right? Assuming that's what happened. So yes, and a fuller proof of reserve. Of course, FTX in their impaired state, they would have never been able to pass a proof of reserve. So the way it works is like via negativa, right? So the credible firms do the proofs of reserve, and so hopefully that's where we get to now. And then the firms that are insolvent or fractionally reserved, they can't pass a POR. They don't even attempt it. And so then we know something is wrong because everybody else is doing the proof of reserve, and then there's a handful that can't. So Gox was missing coins for years. Quadriga was missing coins for a long time. FTX, we don't know exactly what happened. There's clearly some missing coins. And so if proof of reserve had been more normalized throughout the industry, those exchanges would have never been able to do a POR.
Right.
And so that would have been our sign.
That alert.
Something is wrong.
Yeah, that herd immunity is something we need to get to, I think. And
that's why it's so critical for even the credible exchanges to do it.
In some ways, this is a major use case for public blockchains, actually. The fact that digital assets, crypto assets, can be cryptographically proven, the control and ownership of them. you could see that it's not just that this would have helped prevent something like an FTX and does add significant safety for both consumers and institutional clients using these types of custodial services. But it's also that this is a story that the traditional financial world can't tell. This is actually a uniquely crypto feature.
It's an incredible strength of the fact that we're using digital bearer assets. Crypto assets are provable at a distance, right? It's trivial for me to prove to a third party that I have a crypto asset. Can't do that with gold, right? And that's why there's a lot of conspiracies around, is the gold really there?
Is it in Fort Knox? Is it not?
Yeah, I mean, you just at that point rely on institutional credibility. For banks, I mean, I assume they have whatever, liquidity or capital, et cetera. I mean, it's heavily regulated. You're relying on the government to do that. But also
the liquidity for sure. But, when you talk about like bank reserve requirements, right, we know they've been reduced to zero in the past.
Right.
They have a lender of last resort down there in New York and Washington, the Federal Reserve, who can
use one of those.
yeah, we don't have one, which is look, again, it's obviously a really upsetting situation, but it's the free market sort of at its core. What we want is more transparency among these third party. I'm going to say custodians, but exchanges are also custodians in that sense.
Yeah, I think with this, we can achieve an amazing self-regulatory measure, right? So it doesn't have to be top-down regulation. I do eventually expect that proof of reserve requirements will be written into law in certain jurisdictions, maybe even in the U.S. But this is something that can be done spontaneously in a bottom-up way, which would be incredibly positive for the industry. And I think it wards off later, more punishing regulation. That's always been my pitch. Do this now so that it's not worse when the government comes in after a crisis and tries to regulate you harshly.
There may be other things that we need to get from regulation, but this is one that has direct safety impacts to the positive.
Yeah, I mean the actual implications are very, very significant, and I think there's no excuse now not to do it. Now, will all the exchanges, I heard from an auditor friend that there are 17 exchanges that hit them up and asked them about it. Will they be able to, and I know quite a few have done these informal proofs of asset, which is, a good first step. It's certainly not sufficient.
That's like Binance and a couple others giving all their addresses to Nansen or whatever.
Yeah, Nansen has some nice dashboards.
Absolutely.
That doesn't prove much, right? Obviously, the liability side is essential. But it's a good start. So I do like that that's being normalized.
And CZ did actually tweet. He was calling actually for a Merkelized proof of work standard. So I think he said those words.
Yeah. So CZ is very clearly committed to it. Is Binance going to be able to do it? I think on a Twitter space he said 2 weeks. I would say there's a 0% chance they're able to do it in 2 weeks because they have so many assets on the platform, and you have to do this for every asset.
Right.
There's also not that many audit firms to do it.
Purely an amount of effort, as you're saying, to actually get this done quickly.
Yeah.
So you start with what? I mean, you said Kraken in the past has done it. They did Bitcoin and ETH or something.
So here's the fun history of proof of reserves.
Yeah.
There's actually a very colorful history. So after Gox went down, Stefan Thomas, of all people, went around helping exchanges do proofs of reserve, which is a kind of a weird, crazy little piece of trivia. Kraken did it, I think, in 2014. OKCoin did it. A smattering of other exchanges. They all stopped. And then they didn't take the mantle up again until, I think, there was one exchange, CoinFloor, that did it. Smaller exchange. They did it for 5 years straight.
Wow,
which was
good
really
on them,
great.
CoinFloor, shout out.
Yeah. And then in 2021, I believe, BitMEX released one and some code. So that was a great step forward because that's reusable tools. Kraken then redid it. So they kind of sort of came back to proof reserves, which is awesome. Very glad they've been kind of leading the charge on this. And, what's funny is OKCoin, when they did it back in the day, there are actually accusations that they cheated the proof of reserve.
Way back then?
Yep. And there's a now deleted Reddit post accusing OKCoin of cheating their POR. And who was the CTO of OKCoin in 2014?
Oh, was it CZ?
None other than CZ.
Yeah.
None other than CZ.
Interesting.
So he has he knows.
He's got a history with POR, so
he knows proof reserves.
Let's go.
So I'm expecting big things. can Binance deliver? I mean, they are the most important institution to do this because they are not regulated.
And they're the biggest.
They're offshore and they're the biggest. They, more than anyone, need to do it. It's especially the offshore guys that need to do it, right? It's essential they do it. And I'm not holding my breath, though, because I think it's going to be really, really hard.
At least start with Bitcoin and ETH. Those are, I guess,
I agree.
Most, according to their addresses, their most, I think their biggest holdings are BUSD and such, which, that should be relatively trivial as well.
Yeah, I mean, actually, stablecoins are one space where there's already, I don't know if I would call it a proof of reserve necessarily, because the asset is actually treasuries.
Right.
And then the liabilities are the tokens on chain.
Right.
But there's a colorful history now already. I think Trust Token has been doing these attestations with Armanino, I believe.
And Armanino is the auditing firm that's been doing most of these, right? Have they built a special practice on proof of reserve type?
They have, yeah. And they got a lot of flack recently. Binance actually kind of threw them under the bus a little bit because they're like, they're overwhelmed.
Or there was some kind of like they were on the FTX website or something.
Yeah, so
don't work for FTX.
Armanino audited FTX US from 2019 to 2021. They didn't audit FTX International. Now, was FTX US fully clean? Like, they might have had issues too, frankly.
It's hard to know now, we with don't the ties, know. But right.
But I think Armanino is being unfairly maligned here, and they're also the firm that's the most shovel-ready from a proof of reserve perspective. So I'm dismayed at seeing the sort of like Armanino hate.
Well, they're the ones that have done this work already, and this, again, they weren't doing proof of reserves for FTX US, right? Just other auditing work.
Yeah.
They may have done some for.
Yeah.
I think it's a really big step. I think when I look at the regulations that have been proposed, whether it's in Lummis Gillibrand or this DCCPA or even stablecoin related stuff, there's plenty in these things that would be good for the industry in general.
Yeah.
There's also plenty of stuff the industry wants changed. None of them that I am aware of would actually have really made a dent on what happened at FTX.
Yeah, the DCCPA didn't say much about like segregating client balances from operating capital.
Right.
Or maintaining seniority for depositors in a liquidation situation, right? Certainly didn't say anything about proof of reserve. It was more about esoteric derivatives market structure stuff.
Yeah.
Which this is why I never liked it. It's like, it seemed very self-serving. It's like, okay, you're expending all this political capital to get weird, hyper-specific stuff in place to entrench your regulatory moat. What about all this other stuff that the industry
safety,
should have?
Consumer protection measures.
Yeah. That'll change now. I'm actually quite excited for legislative developments in 2023. I mean, assuming Republicans take back the House, like I know there's a number of pieces of legislation they've already written.
Yep.
And some of them do pertain to consumer protection.
I think this is just a clear no-brainer. I mean, it wouldn't have stopped, like you said. It wouldn't have stopped.
Fraud is
FTX.
fraud. No amount of
But it could have alerted the users to this significantly sooner.
It would have been a canary in the coal mine.
Yeah.
So, but yeah, if someone is intent on committing fraud, they're going to commit fraud.
Yeah, what do you take to this? There's been a lot of people, a lot of Bitcoin maximalists, a lot of just general crypto critics who've said, see, like this is the problem with crypto. In one way or another, if it's the Bitcoin maximalists, they say, oh, well, if they had, I don't know, I guess if they had been Bitcoin only, Sam couldn't have stolen their money. I'm not really sure. But like that somehow this is a uniquely crypto story. Do you see it that way?
No, Bitcoiners can't. I know they try to distinguish themselves from the crypto industry. There were a lot of Bitcoiners and Bitcoin firms that used FTX. So Bitcoin was one of the assets that was
misappropriated or whatever.
Yeah, as in a poorly labeled internal account, right?
Poorly labeled internal account. Hidden.
I understand the desire of Bitcoiners to like indict the crypto industry with this FTX thing, but they're part of the crypto industry, right? I mean, most firms that Bitcoiners use to get access to Bitcoin, those are crypto firms. They do all kinds of stuff, right?
Yeah.
You can't be a full purist. I mean, the only way to truly be a purist is to buy your Bitcoins on local Bitcoins.
Yeah.
And then, bury them in your backyard and then never transact or do anything. So, but that's just not very interesting.
Yeah, but I agree with your point here on the industry and the sort of on ramps and off ramps and infrastructure, obviously all being intertwined in terms of by coin. It's not certainly,
and Bitcoin is suffering from this thing too.
Yeah,
I mean,
it is.
It's not immune in any way.
I mean, you see the block clock behind you; it's got a pretty low number on it for what we're used to seeing.
I don't like the looks of that. I'm amazed you got it up here.
I know. Yeah, we were actually having some technical difficulties with the Wi-Fi getting it online. I didn't want to start.
Sign, yeah,
I didn't want to start the podcast until it had something on it.
The block clock just didn't. It was sympathetic. It didn't want to display the price.
It did not want to. I know our friends at CoinKite. By the way, awesome block clock. I don't know. This is the Moscow time that Jack Dorsey had behind him during his congressional testimony. Yeah. But the other point is just that this is just straight up fraud, right? SEC, CFTC regulation. It didn't stop Bernie Madoff. It didn't stop MF Global. It didn't stop Archegos. It didn't stop LTCM, right? Actual fraud and misappropriation. I mean, wasn't Bernie Madoff the head of FINRA?
He was, the predecessor to FINRA, yeah. So, Arthur Anderson couldn't stop Enron, right?
Right. So that, I don't, in that way, I don't view this as a uniquely crypto story at all. I think this is, an unregulated, opaque organization run by, it turns out, basically children who, with no board, no governing board of their company, by themselves in a penthouse, basically, and they appear to have misappropriated funds. And proof of reserves or any other regulation or transparency measure is not going to prevent that from happening. But this is one proof of reserves where we could alert.
Correct.
And to your point, if all the good actors in the space are doing it, then you start looking around saying, well, wait a sec, who is not doing it? You say, FTX, why aren't you doing it? Oh, I don't know. It's too technically hard. How can you say that when everyone else is doing it, right? And so then that's a giant red flag, and you start to see people not use that exchange. So I think this could meaningfully move the ball forward when it comes to safety in the industry.
I think it'd be one of the most important developments ever from a self-regulatory perspective. And so, I mean, this is why I called upon Coinbase to do it. And I know they don't appear to have any imminent plans. When I asked them, they said, well, we're a public company and we're audited, and so just look at our quarterly filings. It's like, that's fine, but that's not very crypto native. Why don't we take advantage of the innate transparency of blockchain? Look, we get attacked for blockchains being transparent. This is one of the times when it's actually useful, right? The fact that it's so transparent. Take advantage of that, guys. Set the tone for the rest of the industry. You improve everybody's prospects if you take a leadership stance, do proof of reserve, and make it something that is totally normalized throughout the industry. So I hope they come around on that too.
Quick break for our listeners. Our poll last week was, what portion of funds do you think FTX depositors will eventually get back from the exchange? 49% said none of it. 41% said less than 50%, and the rest was negligible. This week, our poll is quite simple. Will Sam Bankman-Fried testify before Congress? Yes or no? That poll is pinned to our profile on Twitter at GLXY Research. Go there, vote, make your voice heard. Now back to the show. Let's welcome Christine Kim, the queen of the merge, my colleague here at Galaxy Research, into the conversation here with Nic. Welcome, Christine.
Thanks. Hi, Alex. Wow, the merge feels like it was years ago.
It really does.
I mean, those were simpler times.
Actually, we did a podcast 2 weeks ago, you and I, and we were like, man, pretty slow news week. There was this thing about Alameda's balance sheet. Not so sure, what it is. I guess we'll follow up on that next week. Well, that next week was last week, and boy, did we follow up on it. And did it become big news? Yes. Let's keep the FTX conversation going a little bit. I saw... the House Financial Services Committee is they're going to do a hearing in December about FTX, et cetera. But supposedly they're in negotiations with the Bahamian regulators and I guess Sam Bankman-Fried to bring him to the U.S. To testify before Congress. What do we think the odds are that Sam Bankman-Fried lands on U.S. soil to test and goes to the Capitol?
Yeah, I mean, I think he'll end up on U.S. soil, but it'll be under different circumstances.
What do you think, Christine? Any chance of it?
I have no idea. I mean, the U.S. government has a lot of sway, so I wouldn't put it past them to force this to happen. And so I don't. He can only hide for so long, right?
I don't know. Probably. I mean, the reach of the U.S. government is long and far. I would personally be very surprised if he testifies before Congress. But there will be hearings, almost certainly, about this issue before Congress.
I think Binance was also on the list
of
people that they wanted.
I don't know if they were on the list of people they wanted to testify, although maybe they are. They were in the press release of like the hearing will cover like FTX, Alameda, like Binance, etc., or something is what it said, which I thought that was doing Binance a bit dirty by including them on that press release, by the way.
Yeah, there was this Financial Times article that was circulating over Twitter where the article had said that a lot of the part of like FTX's downfall was because of CZ's tweets, and everyone on Twitter was just like ripping on it really hard, saying that this was inaccurate reporting. So lots of controversy, I think.
Yeah, it's like a deliberate attempt to reframe this away from FTX's and Alameda's malfeasance to like, oh, it was actually CZ's fault. It's like CZ just exposed them.
Right.
All he did was make 4 tweets.
Right.
I mean, and thank goodness he did. I mean, it could have been worse.
Well, would have gone on longer, perhaps. I mean, I think you can't deny that the CZ's transparency about his actions with the FTT token definitely did dramatically impact sentiment and fears about FTX's solvency. But we know now they weren't solvent, so
they were warranted fears.
Right, warranted fears.
He did the right thing.
Yeah,
he did the right thing.
Okay, so also along these same the same discussion, there were funds last week. So after our podcast aired on Friday, a large amount of funds appeared to have been stolen from FTX, and we didn't know. I think we still don't know who has done this. One exchange, Kraken, tweeted, or their head of security or something tweeted that they actually think they know who it is. I'm sure they're in contact with, whichever law enforcement or whomever they need to be about that. But we don't know what happened here. There's lots of speculation that it could be an insider attack. It's really hard to know. You think about it, like all these FTX employees are gone. Maybe their security team is gone.
Right.
This is a solid target in that way. So I don't want to speculate about who it could be, but we will say that apparently by total ETH held now, this hacker who immediately converted everything they stole into native ETH, apparently is the 35th. Their account on ETH on Ethereum is the 35th wealthiest Ethereum holder in the world. Were
they one of the largest holders before the hack?
No.
Okay.
No.
Nouveau riche.
Yeah, nouveau riche. Yeah. But Christine, you were saying about that list.
Yeah, the top account on that list is the Ethereum deposit contract. So basically all staked ETH. The reason why like the top holder is because everyone just uses that contract to stake ETH on the Beacon chain. And there are several other accounts on that list in the top 10. I'm pretty sure that the majority of the top 10 are accounts held by exchanges, like publicly labeled accounts or smart contract accounts. But this is one of the few that's an externally owned account, basically like operated by a user, not by a smart contract or a publicly identified entity. And so this kind of makes me think a little bit to the DAO hack of 2016 about one of the rationales of doing an irregular state change was that we didn't want a large ETH holder to be, to be like a criminal.
Yeah.
But, look where we are today, and it's still happened. Like, obviously, there's not going to be an irregular state change on Ethereum, but like that fear has manifested. One of the largest ETH holders.
Is that obvious? A regular state change, also known as taking funds from an account in a hard fork?
Yeah.
Yeah.
It's funny that
is it certain to not happen though? I mean, I think I admit if it's much less likely to occur. I mean, it didn't happen with the parity bug, right? It didn't happen plenty of other times it could have happened, but like, are we certain that we won't have an irregular state change on ETH?
That's a dangerous question. I mean, I think Ethereum is decentralized.
You're certain?
I think I'm certain.
Yeah.
Yeah, I think
certain?
the odds of that are almost zero.
Yeah.
It's interesting to see these irregular state changes happening on other chains that are impacted by FTX, like I think Serum, for instance, was forking out.
That's right. Serum's a DEX on Solana that FTX, did they even build it?
Yeah, they basically did, and they were marking it in the billions as far as an asset on their balance sheet.
Right, they held SRM token.
but the float was incredibly low.
Was it like 50 million?
This whole thing vindicates the kind of like subset of people that were like, forget about market cap, guys. Market cap is a garbage metric. Look at free float. Look at look at real liquidity measures.
Right.
You know, so I think we can put the market cap infatuation behind us because that was part of the scheme. You know,
It's true.
representing themselves as extra solvent based on these totally liquid assets. But yeah, I think Serum is now, or 2 days ago, did some kind of fork.
Yeah, I don't remember the exact details. And I think the issue is something about like the upgrade admin keys to this DeFi application were held at FTX. And
Yeah,
so they
so
were forking in order to remove those
Right.
keys, which, to be clear, sounds like a very prudent. If I'm describing the issue correctly, then that sounds quite prudent to do. But also, I wonder if they were going to remove
But I think
FTX's ownership. Like,
yeah, by doing that, I think they might have forked out
Right, their
FTX
coins.
balances. So
Yeah.
did they just eliminate a big piece of what creditors
or perhaps
were now
recoverable sum.
owed?
Very
Yeah.
bizarre. Speaking of recoverable sums, Sam Bankman-Fried donated a lot of money around Washington. I don't know how bankruptcy rules work here, but if some of that was within a clawback period, is that even possible to be clawed back?
I think we're all going to become experts at like bankruptcy
law.
law.
Clawback?
Yeah. I mean, I think there's also fears or concerns that people that withdrew funds from the exchange right at the death will also themselves maybe have that clawed back. The political donations,
A lot we don't know.
I think they should give them back. The political donations, even if they're not legally mandated, because it's clear now that was theft from the users.
Well,
of the exchange.
we don't know if it was theft, but we do know that it was part of the minus $8 billion hidden, poorly labeled internal fiat account.
Those are illegitimate donations. Like,
I'm never going to stop laughing about that.
If
accounting.
like a mobster, you know, to normalize themselves, uses their racketeering money to give it to like local, you know, politicians, those politicians should not accept the money. It's blood money, right? This is the same. I think this is the proceeds from like basically a fraud, as far as I can tell. So I don't know how anybody that received those donations can hang on to them.
Let's move on. Christine, you've been following, you're well known for following the Ethereum development community. You know, we've talked a lot about, this is sort of tangential. I think we'll semi-wrap up our FTX conversation here. But what is going on now? They've been meeting again. Remember, the developers took a bit of a vacation following the merge, which was way back in September. What's now on the agenda for the developers?
The agenda is definitely focused primarily on Shanghai, the next upgrade. I mean, that's always going to be the focus. It's just what's the next thing to change about the protocol?
What's the next upgrade, right?
Yeah.
We were joking, like, is there a time when, like, Vitalik comes out and, like, waves a flag and is
Yeah.
like, we're all done,
We're all
everybody
done,
pack it up, like, protocol's ossified.
Yeah.
We did it.
We did it. Congratulations, guys.
Can you imagine?
And I think the consensus in what you said, too, is no, absolutely not. They'll never stop upgrading. But anyway, the next
far as
upgrade. So
I
what
can
is in
tell.
the next upgrade now? What's it look like?
So I think developers had really come together about what the core of Shanghai should look like during their first meeting back. And it was, you know, at a minimum staked ETH withdrawals and then like a couple of other minor optimizations and improvements to the network. But lately, so this week in particular, there's been quite a lot of concern, I think, on Twitter about when exactly staked ETH withdrawals would be enabled in Shanghai, even though it has been confirmed that it's going to go into the next upgrade. Mainly because the rest of Shanghai hasn't been decided. So even though we know staked ETH is going to go into Shanghai, let's just say developers agree that 3 or 4 other major code changes should be included into that upgrade, then the timeline for Shanghai gets delayed to next fall or even potentially like 2024 in
Oh
like
my
the
gosh.
worst case. And so the concern is that like, you know, you made a decision now, but almost like the more important decision is like, what else is going into Shanghai? And can we please figure that out soon so that people have some certainty around like, is it going to be next summer? Is it going to be, you know, as early as like next February if they only do staked ETH withdrawals and nothing else into that upgrade? And so I think that's become quite contentious. I think the 3 other major changes that are being discussed is, of course, EIP 4844, the scalability upgrade for Ethereum. That is going to require lots of research and development. The second one is EOF implementation. It's basically an upgrade, a new version of the Ethereum virtual machine. That would definitely, the full implementation of EOF it would take a lot of effort. And then the third one is BLS signatures. Not as heavy of a lift, but it just introduces like a new, more modern cryptographic scheme into Ethereum and allows people to enable a lot more use cases because Ethereum has a pretty outdated smart contract language, which limits the functionality of what you can do. So if you just start to include like new cryptographic signature schemes like the BLS one, a lot more you can enable. So there's a few others too, but that has been really like the focus of the discussion. Last week's meeting was pretty contentious, lots of debate and discussion going into, what else do we include into Shanghai?
Goodness.
And tomorrow there's going to be a meeting again to discuss, next steps.
So it's really around timing for Shanghai, which is mostly impacted by what other things are going to go in there, right?
Yeah.
But that is, they push staked ETH withdrawals until 2024.
Well, 2024 mainly for EIP 4844. Like the estimation of some people is that EIP 4844 is going to take until 2024, and so if they include it in Shanghai,
correct. Now then, Shanghai is therefore delayed. But that will cause an uproar, I think. And by the way, perhaps rightly so, because that's a lot longer than I think a lot of staked ETH depositors, beacon chain depositors, let alone, thought that they would have to wait.
I saw a lot of criticism about that on Twitter.
So what are the odds that they blow it out and they do Shanghai is just stake ETH withdrawals and they move everything else to a next upgrade?
Split it into two.
Yeah.
So the first meeting back where they had agreed staked ETH withdrawals was going into Shanghai, there was a lot of consensus around let's not do two upgrades. Let's just keep it into one because the amount of testing energy and like governance process to even do a small upgrade is the exact same as a big upgrade.
Totally.
So why not just shove everything into a big one? So that was the consensus. But I think like that consensus has started to become far more unraveled through subsequent meetings because of this understanding that Shanghai might become considerably delayed because of how big they want to make it.
Yeah, that would play right into a lot of criticism about that Ethereum developers receive from other networks, from Bitcoiners, about the staked ETH being locked, right? And but also just, gosh, that could be a long time. Those are important stuff they want, whether it's dank sharding stuff or whatever else, the sort of core ETH 2.0 ideas that on scalability that we're waiting for on Ethereum. But if you have to do two governance processes, two testing processes, two, exchange and stakeholder upgrade processes, well, yeah, that's hard if it's in 6-month period. But if they're going to delay the thing a year and a half, what they still have to do once, it's like, what, so they're going to do nothing? Or it would be easy for them to do that process once for this and then take another 8 months, 8 or 9. It seems kind of ridiculous to me, actually. That I doubt that consensus can hold. But I don't follow the developer community closely on Ethereum at all. So I defer to you on this.
Yeah, you would think that it's a little simpler, but I think it's hard when, for the longest time, it was let's try and keep the upgrades as like bare bones as possible. But it's like, what is the straw that's going to break the camel's back? You always think that one additional code change won't actually delay the process that much.
Right.
And these are upgrades that have been in the pipeline for several years. So BLS signatures.
So they don't want to be delayed either, to be honest.
Exactly.
Yeah.
And so I really do think that it's about priorities. Like how much does the Ethereum community need scalability now, need greater censorship resistance, privacy guarantees now, and how do those compete with the staked ETH withdrawal priority, which really is for the benefit of people who had deposited way back when, in 2020, and just like being true to that promise, which surprisingly, I'm not sure if this is 100% true, but I saw on Twitter that on the Ethereum Foundation website, like ethereum.org, it used to say that staked ETH withdrawals would be enabled 6 to 12 months after the merge, and they took that down from the website, which I think is why there's so much controversy on Twitter this week because of that change on the website.
Specifically website change. Let's talk briefly about DeFi. There's been a lot of conversation that, FTX wasn't DeFi, right? And, who did Alameda pay off first, right? They paid Compound, they paid Gearbox, they paid Abracadabra. We saw the same thing with Celsius. They paid down their DeFi debts first. I think the automated, transparent, rigid nature of smart contract-enabled decentralized finance clearly puts it at the top of the creditor stack, basically, which I think is an interesting positive, right? You can't call up the smart contract and say, "Hey, bro, give me another day, bro. I just need another week, bro.
Yeah.
Please, dog. Don't, please, bro," or whatever. That meme. So that I think that's in a lot of ways has really shined through these credit crunches. What are you seeing in the DeFi world over the last week or so?
Lots more on-chain activity, partially, of course, because people are scared and they want to pull their assets off of exchanges, be it centralized or decentralized.
Yeah. Cold storage, baby. Ledger said that their sales were at an all-time high, their hardware wallet sales.
Yeah. Lots of more focus and interest in self-custodying now more than ever. But one of the headlines that got my attention was that Uniswap is now the second largest has the second largest trade volume for trading ETH, even ahead of Coinbase.
Wow. Behind Binance, I assume.
No, not.
I'm saying Binance as number one.
Oh, yes, Binance as number one.
Uniswap number two. Wow.
Yeah, which I thought was pretty big. And then also DYDX seeing a 60% jump in their trading volumes. And this, of course, is all playing so nicely into Ethereum's tokenomics, which after the merge is far more sensitive to on-chain activity than it was before. So for the first time, we're seeing, I think it was the beginning of this crisis. So about 2 weeks ago, we saw for the first time the contraction of total ETH supply, around 6,000 ETH. We're basically, since the merge, 6,000 ETH smaller in terms of total supply. Which I know
that's the IP 1559, right? Which,
in addition with the merge, because issuance has gone down,
and with the merge's overall reduction in issuance, that's transactional activity resulting in higher base fees, which get burned.
Yes, and now that ETH isn't being issued, now is being issued at a fraction of what it was before the merge.
Right.
We're really starting to see Ethereum's tokenomic design work and play out, which has been really encouraging to see. I feel like that's been one of the positives, testing out the resiliency of DeFi protocols and also Ethereum's tokenomics after the merge, and both have been incredibly strong through this.
Let's wrap it up here. Thank you, Christine. What do you think, both of you, what's on the near-term horizon? And Nick, well, hold on, actually. You're here in New York, by the way, which is great.
Right.
I thought you were a Miami guy. What are you doing up here?
I actually came to New York for a concert. Magdalena Bay.
Magdalena
Excellent
Bay.
band. Very much recommend them.
Awesome.
And
you're
amazing serendipity that I'm here. Yeah.
You're heading back to Miami soon, or are you going elsewhere?
I'll be in Texas for the Blockchain Summit.
Oh, the Texas Blockchain Summit.
Last one of the year. Yeah, long year of conferences.
Yeah.
But that's a great one, actually. So really looking forward to conversations with policymakers there.
Oh, wow. Yeah, and that's the one that, was it Ted Cruz and people
He
were at
spoke
last year?
I think he'll be here there again. Yeah.
So is it a very Bitcoin mining focused conference, or is it sort of everything?
Yeah, mining features of certainly very heavily. It's going to be an atmosphere of doom and gloom. The miners are very distressed right now. I mean, that was kind of the big story of maybe 3 weeks ago, was the miners suffering. That overshadowed now by other events, but the mining sector is still very much screwed.
Yep. Tough to hear. I mean, I think they're gonna come out of it some way. Hash rate's still at an all-time high.
Yeah, so basically I think the equilibrium will be found when hash rate falls, profitability increases. So you will get that negative feedback loop to arrest the insolvencies, but I think there will have to be more miner failures first. Most miners are just not operating profitably right now. Electricity prices, hash rate increasing, and Bitcoin price falling is a triple whammy.
What a show today. Our friend Beimnet Abebe from Galaxy Digital Trading. Thank you. Christine Kim from Galaxy Research. And my friend Nic Carter from Castle Island Ventures and Coinmetrics. Great to see you. Thank you for joining us on Galaxy Brains.
My pleasure as always.
That's all we've got for Galaxy Brains this week. Thank you all for listening. Have a great weekend and stay safe out there. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXY Research. See you next week.